Hey there YouTube. So for this video I wanted to cover IRS Form 8582. It is the passive activity loss limitations form that's generally included with your Form 1040 if you are a taxpayer that has an ownership interest in a business and your participation level is that of a passive owner, right? So you don't materially participate in the company. And so if you have losses, you've got to be cognizant of these passive activity loss or PAL limitations. So I've got a sample 8582 in front of us here with another with the other 1040 pages as well, and then a slide that covers the fact pattern that we're going to look at, and basically what the form is designed to accomplish. So this form, like I said, it's attached where you have a taxpayer that's an investor in a partnership or an S corp, and their interest in it is of a passive nature, right? And so it's important to distinguish passive versus non-passive, because when you have passive activity losses, those losses cannot be used to offset active income. Okay, now they're not lost forever, right? This is why the 8582 exists, is because you have to report the losses and then suspend them or defer them to future tax years. So let's look at an example here for John and his ownership interest, and I think and then we'll look at the 8582 and hopefully that'll be a little more clearer. So we have John here. He is a 15% owner in Restaurant ABC LLC. Okay, so this entity is taxed as a partnership for federal tax purposes. Now John's participation in the company is that of a limited partner, so he doesn't do anything in the business, right? So he doesn't help make management decisions. He doesn't work for the company. He does nothing. All he did was invest in the company because they needed to raise some capital. So because John does not materially participate in this active trader business, it is going to be a passive activity to John. Now in John's Schedule K1 for 2020, line 1 of the K1 shows a loss of $4,500. And then in 2019, line 1 showed a K1 with a loss of $2,000. So for both tax years, the company was losing money, right? Not unheard of. It happens to a lot of companies where they're running at losses. So he's had $2,000 in losses in the prior year, $4,500 in the current year. So what does he have to do with his tax return? The Schedule E, the 8582. Well, he deferred the loss in 2019. He's going to have to defer it for 2020 as well. So let's look at the 8582 here, where we can see he enters the information in Part 1 for the current and prior year losses, and how he completes Schedule E as well. So let's jump over to 8582. So this is the PAL limitations form. And we can see here that he's entering the information in section 3A through D, right? So activities with a net loss, this is the current period, $4,500, and then the prior year's unallowed losses was that $2,000 amount, right? That was for the prior period. Now you see here they're referencing Worksheet 3, column B and C. Let's jump down to those worksheets because that'll better help see how you need to complete these forms. So Worksheet 3, this is where you would start, right? So you list all the ownership interests in the 1065 K1s or the 1120S K1s, or even a trust, right? If you have a 1041 K1. So we have Restaurant ABC. For the current period, there was a $4,500 net loss. Okay, so that's 3B. The prior years here, we had $2,000 in unallowed losses, and this should be a cumulative amount. So this is just the 2019 amount because that's when John invested, but if he had losses from all those other prior years, they would add up to this amount here. Okay, and then we have the overall gain or loss for the entity, so $6,500. Now, if we go down to Worksheet 5 should be completed if you have any losses up here in Worksheet 3. And what this is designed to do is if you need to list all of the entities where you had losses, but with the ratio and the unallowed loss calculation, what they're doing here is if you were in a position where you had multiple investments in passive companies, and so you had positive passive income and you have negative passive income here, like the losses, you can use some of the losses to offset those other passive gains. And so that's where they're doing the allocation here. Is if you were in a position, let's say, where you had another couple entities down here where you had some passive income, and then he had some other interests with passive losses, you would basically use a piece of the loss from each of those pass-through entities and allocate it to the gains from the other ones. In this example, we just have one interest, right? So it's very, very simple example. I'll probably do another video that's got a little more complicated of an example, but for purposes of this exercise, you just have the one entity here with a 1.0 ratio and unallowed loss of the full amount. And then in the worksheet 6, we just list all of them, right? So we list, after all the allocations are done, name of the activities, what were the losses, and what was the unallowed and allowed for the year. In this example, again, very straightforward. All of it is going to be unallowed because John is a passive investor in this company, and he has no other passive activity gains to offset with these losses. So all of it is going to be deferred for the 2020 tax year. So if we jump up to Schedule E here really quickly, just to show you how the reporting goes here. So this is Schedule E, used to report supplemental income or loss. Part 1, page 1 is for rental income or loss or royalties. This is blank because John doesn't have any of those investments. Part 2, page 2, is for income or loss from corps and S corps, right? And then estate and trust are in Part 3. So Part 2 here, again, we have to list the interest in the entity. So we have Restaurant ABC. It's a partnership, the EIN, and then on line A here for the restaurant, you notice all of this is empty, right? And all of this is empty because, again, we have non-passive losses that are not going to be allowed to be deducted. So passive loss allowed is 0. Again, there's no passive income, so that wouldn't be reported there. And then non-passive losses and non-passive income. This section would be completed if John materially participated in the company, right? So if he was a managing member and actively ran the company and the company generated losses and he had basis, then you would see the entries here, and we wouldn't even be doing an 85, 82 for this interest because it's not a passive activity to John. But in this case, it is. So the passive income and loss that's being allowed, or the income inclusion, nothing there. And then, of course, because this is a passive activity, we don't have any non-passive entries either. Okay? So last point here, just to highlight, very, very important to consistently file this form. I've gotten a lot of clients where they had passive investments in companies, and the CPA or preparer said, well, we don't even have to report it because it's at a loss. Horrible idea. You should definitely report it. You still have to report it, right? It still needs to be reported on Schedule E. But more importantly, if you have losses for multiple years piling up, you want those numbers to be reflected here, right? You want to get credit for those losses, because if you don't file this 85, 82 every year, you have no idea of tracking how much cumulative loss you have deferred for the entity. And that is very important, because when you actually make money from that business, or if you have other passive income from other sources, you're going to want to be using it to offset those gains. And then ultimately, when you sell a passive interest in a company, all of those losses are immediately freed up, and they're treated as non-passive losses, so you get the deduction at that point in time. So 85, 82, absolutely file it every year. If you have passive activity losses, make sure you're tracking them year to year, and that'll certainly benefit you in the long term when you do start to make some money through those investments. So that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.